Right. Hello, everyone. Evening. Evening, everyone. If you can hear me, type a note, say hi, and I know we can get going for our Friday session together. All right. Type a note, drop a note. Let me know you're with us over here. Hi, KT. All right. Hi, Dunkel. I've not done this for a while. Give me some time. All right. There we go. All right. So, welcome. We still have Facebook users over here. Hi, Florence. It's been a while. All right. Nice to have you here. All right. Hi, Nelson. Okay, hi SZ, hi CM, hi Chanel, and hi Josephine. All right, now Facebook users, can I trouble you and get you to click on the www.streamyard.com/Facebook link in the live post itself in the Facebook, all right, and then approve Facebook use for StreamYard. Okay, and then we'll be able to see who's leaving comments with us during the session, all right? Hi, Jency, and hi, Jason. Good to have all of you here once again. All right, now, so once again, this is our public session for Portfolio Building Live for Cashflow with Terence over here. And once again, before I start this session officially, we will be discussing some live trades that I will be putting on our official portfolio. So do your own due diligence and risk assessments before going ahead and deciding if you want to place the same trades on your accounts. Yeah, trading and investing always bears a risk of loss, so please do your own assessments before following suit. Okay, all right, now the disclaimer is out of the way, so let's get ourselves going. Okay, now, so I just want to talk a little bit about the markets first. Okay, I'm not going to hold everyone back longer, so I'm starting the session prime and proper, and then hand you back your Fridays. Now, so what has happened? What has happened is we had the breakouts, everyone. All right. So as we see over here, we have the breakouts, right? And we are still moving into the breakouts, but you're seeing something happen over here. All right. You're starting to see the movement starts to dwindle off over here. Now, so we had that one big breakout, and then it went sideways for a few days, and then the next breakout after that. Okay, once it clears 4,000. And as of right now, we have no pullbacks at all. Okay, we have no pullbacks at all. Now, so what I'm expecting the market to do right now, okay, is perhaps to have a slight pullback. Okay, maybe to test this $4,000 level, 4,000 points level, or perhaps to test the breakout point, which I'll probably have to redraw it over here. All right, pardon me as the platform is lagging once again. Might be better off. It's really lagging. Oh, man. All right, that's okay. Let me just try to do it a much easier way. Just going to go to drawing tools. Mm-hmm. All right, there we go. All right, so it's about 3,960 level. So if we do get a pullback, we may see a pullback to the 4,000 point level, which is 100 points from here, or if it gets more severe, about 3,960. Now, and then we may have another push upwards after that. All right, and with that second push, it may set up a divergence in the RSI and stochastics indicators. Okay, but as of right now, markets are not ready to come off, as it seems. Yeah, all right, as it seems, markets not ready to come off. All right, we won't know what happens tomorrow, but anything can break the market at this moment. It could be the bonds, it could be financials turning, It could even be the technologies making another correction right now. Anything can happen. All right. So this is definitely not the time to go chasing the markets. All right. If you have went chasing the markets, you should have done so when it broke the 4,000 level. All right. If you try to do this right now, it's already too late. Okay. Now, why do I say it's too late over here? Because for those of you who trade on charts, you will know that markets move in what we call swings. All right, so we have that swing low over here and then the next swing high. All right, so after a swing high, all right, what usually happens after that, or the higher probability of the next move, is actually back towards the swing low. Yeah, okay, all right, which is the corrective move. Now, so if you try to chase the market right now, okay, and try to be bullish and try to catch up, you are gonna be in for a surprise. All right, I can't say it can't go higher, right? But the odds are definitely stacked against you. Right, so what is it time to do then? Right, this is actually time. Right, if you want to get long, you need to get long into what we call the defensive stocks again. We have done this with our portfolios a few months back, right, and we are going to do it right now here today once again. Right, so I'm going to take off all my positions that I have open, right, and are profitable right now, and then to reload some positions in some defensive sectors and defensive stocks. Right, so that's how I'm viewing the markets right now. If we go to a longer time frame, and of course, if my chart allows me to do that. All right, now, so on the longer time frame over here, this is interesting. The MACD may set up for a divergence if we start seeing the market turn over right now. All right, and stochastics, almost there. But stochastics is at 98, everyone. That's pretty crazy levels over here. All right, and of course, there are times where market has made such crazy levels as well. Okay, but every time after that, you start to see the swing low, right, as I mentioned earlier. Right, so that's why I said this is definitely not one of those times where you want to start going long and be very bullish, okay, by adding on too many trades. This is the time to be defensive over here. All right, now, so having said that, let's go to our portfolios and see what we have at the moment and what we should be doing, okay? All right, now, so this is our portfolio over here. Let me just widen it up. Okay, and we have a couple of trades over here. Our portfolio hedge is not looking too good, but we'll hang on to it. All right, we do have until the 20th of April, which is 1.5 weeks from now. All right, yes, we will be managing this one. All right, so let's see when the time comes over here. All right, now, for now, I want to manage the VZ trade, which we have 1 week to expiry over here. All right, it is definitely going to be profitable. All right, let's see what the premiums are today. All right, and decide what we want to do with it. All right. Oh, I think our swim platform is really lagging right now. Right, here we go, everyone. We have the 16th of April 55 put option, which we sold for $1.10. All right, it's oof. As all of you can see right now, it's only worth 4 to 5 cents over here. So you could close it by paying 4 cents, or we could close it by paying 5 cents. All right, so I'm going to get this trade closed. I'm just going to give the market price so that we don't waste any time. All right, so we're going to close this trade at 5 cents over here. All right, so 4 or 5. All right, we're going to close it at 5. Okay, I'm just going to pay 5 and we're going to get it closed. All right. So let's record it down over here. We close it at 5 cents. We'll free up the margins. All right, so we made $315 in cash flow on this trade over here. All right, it's almost a max profit. All right, now we're closing this trade. What's today's date over here? It's the 9th, right? Yes, it is. All right, so we're closing this trade over here on the 9th of April. Okay, that's gonna free up the investment requirements. All right, we are also going to close out our Walmart trade. All right, we caught it right and spot on with Walmart over here. All right, so this is definitely something we love to do. All right, and we're going to do it over and over again. All right, so let's close out our Walmart trade over here. Let's see what's in store. We have the 21st May 130 puts, which we sold for $4.90. All right, so let's go close it up. There we go. All right, 21st May 130 puts. All right, it's down to about $1.10 to $1.12. Okay, now, so we have about 1 month to go, and we have already pocketed 75% of the premiums that we got when we sold over here. So this makes it a good close over here. So I'm going to pay 112, and I'm going to get this trade close. All right, so I'm going to pay 112, 113, and I'm going to close off this trade today. Yeah. All right, so let's go ahead and do that. All right, so I'm going to be fair over here, and we're going to record it down at 113. Now, so that trade is going to pay us $754 in cash flow. We opened it on 19th of March, all right, and we're closing it today on the 9th of April. So that's slightly under a month. All right, we took about 3 weeks on this trade, and that's pretty good over here. All right, that's pretty good. Okay, now, we're also going to take our Tupperware profits off. It's 1 week to expiry. We have the 16th of April, $24 put option. All right, hang on, everyone. All right, we have the 16th of April, 24 puts. Let's go. All right, there we go. It's about 10 cents over here. You could pay 10 cents and get it closed right now. All right, so we're going to close it off for 10 cents, everyone. All right. So that's $339 in cash flow that's locked in officially over here. And we have closed this trade as well on the 9th of April. So we have freed up all our margins. We're only tying down $8,100 of our portfolio right now. Now, for those of you who have been joining me for the longest time ever, you know that this is a $100,000 portfolio that we have set up, right, for the purpose of building this portfolio together with you and showing the cash flows you're going to be generating. And up until today, we only have one trade where we're still holding on to the stocks, and that's Nokia. All right, Nokia. All right, and apart from that, and apart from the VIX trade that we have that is still running and open, all right, we have made profits on every single trade that we have taken on this portfolio. All right, it's been a good run over here. Markets haven't been, all that bright and shiny, right? But we have navigated it really well, right? And the portfolio goes to show that. Now, so what we're going to do is we're going to start adding some positions over here in the month of April. So let's go, shall we? Right now, so what's going to be trade number 45 right now? Before I go ahead and do so, I just want to educate those of you who might be joining us for the very first session over here. In this public segment, all I'm going to talk about is how we can sell portfolio puts, okay, which means we are put option sellers over here. But by doing so, we will, one, put up full cash requirements when we sell these put options. All right, two, if anything goes wrong with the trades, I am going to be a happy owner of the stocks. Okay, that means I'm more than happy to take delivery of the stocks for the put options that I'm selling on any company right now. Okay, now, but of course, the aim is to generate cash flows instead of ending up being a buyer of the stock. Okay, so I hope all of you can understand this. There's no margins in this public segment. All right, all we're doing is be ready to take up the stocks if we're going to sell any put options on them. Okay, and what's our aim? Our aim is to generate about 20% per annum using this model portfolio over here. All right, to show everyone that it can be done. Yeah, all right, under all market conditions, all right, it can be done over here. So let's go ahead. All right, everyone. So today, which undervalued stock, which defensive stocks am I going after? All right, so which undervalued, which defensive stocks am I going after? I'm going after the healthcare sector, everyone. right? I'm going back to Cardinal Health. Okay, so I'm going back Cardinal Health over here. Cardinal Health had kind of a drop off over here as the market went up, right? So I'm going to take a 1 month expiry on this. Okay, it is right now about $59. I'm going to go one strike out. Okay, I'm going 57.50. Okay, we're going to try to sell this for about 150 right now today. Okay, 150 right now today. All right, so let me go ahead and set up the order. All right, I'm going to sell the typical 3 contracts over here. Okay, so 3 contracts of the 21st May CAH 57.50 put option. All right, I'm going to place this order for $1.50. Let's see if they're kind enough to give it to me. All right, my order is out. All right, you should see 150 start to pop up over here under the bid price. Oh, here we are, 150. Okay, but they're not giving it to me yet. Okay, I'm just going to leave it. I'm just going to queue for it over here and see if they give it to me somewhere along the way. All right, now, so in the meantime, while we are waiting for this trade to get filled, right, let's do a calculation on what's the ROI looking like when we take this trade. Okay, all right, now, so if we get this trade filled, okay, which is not yet at the moment, right, we will be making $1.50 on an investment of $57.50 per share. Right, so that will put this trade with an ROI of 2.61%. Now, this trade is going to be a 6 weeks trade. All right, it's 42 days to expiry, so it's about 6 weeks. So all I'm going to do is to divide this ROI by 6 weeks and then annualize it by remultiplying it by 52 weeks. All right, hits our target over here. So this trade pays 22% per annum, right? If we were to repeatedly do the same trade over and over again. Yeah, all right. Somebody's jumping my gun. Somebody just went in with 145. I know who. All right, now I don't know who, but I know somebody did it. All right, I know somebody did it. All right, now Andy, I think and I remember, were you the one who asked me about Viacom? All right, were you the one who asked me about Viacom, Andy? All right, if you did, right, you would understand why. All right, I said I'm never interested in going after stocks that have went parabolic. All right, okay, now it's just one of those things over here where I don't see myself doing. Okay, of course, we all know what Viacom did and happened over here after the collapse of Archegos. I think it was, I hope I got the name right. All right, Archegos invested heavily into a lot of media companies. All right, Andy, it's not you. All right, I remember someone else. All right, in one of these public segments over here 2 weeks ago, I think. Yeah, all right, okay, great that it wasn't you, Andy. All right, somebody asked me about Viacom over here and what do I think? All right, so I clearly said no, and all of you can see why I don't do so. Yeah. All right, now, so next up over here, what else is defensive? Okay, what else is defensive? Isaac, yes, for portfolio purpose over here, that means if I'm happy to own the stock, all right, what I'm doing right now is the 57.50 puts for 21st of May. All right, so that's what I'm doing. Somebody pulled out your order. All right, now, nobody wants to admit after I called you. All right, look, everyone, it's perfectly fine if you want to jump the gun. Yeah, all right, it's perfectly fine. I'm just saying it as I see it over here. All right, hang on, everyone. I'm just getting set up for the second trade that I want in. Ooh. Okay, all right, now we're still queuing for the order over here, so we'll leave it running. All right, let's check it out. Next stock. All right, everyone, ready or not? The next stock that I want to get myself in today. Oh, not as much as I like it right now. Give me a minute, everyone. right, I will do it. I will do it. I'll take it. I'll take it. All right, give me a minute. I'll take it. I'll see what's the ROI over here, and I'll take it. 35, 2, 1, 2, 2. Hang on. If the ROI fits, I'm gonna go after this trade. All right, so 2.19 divided by 35. All right, okay, so 6% divided by 41 times 52. Oh no, it doesn't fit. Nope, it doesn't fit. Ah. How about this? 3.2 divided by 37. Okay. 8.6. 8.6 divided by 52. I can't go after this trade, everyone. The ROI doesn't make out. All right, now, so we'll skip that. But I do have a last one over here. All right, I do have a last one that I want to get in. All right, and this forms pretty much the play money side of the portfolio. All right, as all of you realize, the portfolio is underexposed right now. So I'm going to take a trade on one of those growth companies. All right, so I'm going to take a trade over here on one of those growth companies over here. All right, so I'm going after this company called Medallia. All right, so today I'm going after this company called Medallia. Now, so why do I want to go after this company called Medallia? All right, this will have to start from the story behind it. All right, so let me take this moment and describe a little bit about why I like it and why do I see potential in it. Right now, so if any of you realize that since COVID has happened, all right, SaaS companies have been on a tear, which means they've been enjoying a lot of love from the market, right? So by enjoying a lot of love from the market, that means that we have seen a lot of these stock valuations shoot through the roof, right? And today with Medallia over here, I'm going after what we call a SaaS company. Right now, so what does this company do over here? Right, they are in the field of running. Okay, what do we say over here? Let me find the right word. I need to find the right word over here. Yes, they focus on what we call customer satisfaction. Right now, so the nearest competitor that I can put out that all of you will probably come to mind immediately, right, will be SurveyMonkey. Right, so they're not even their direct competition, right? But one of the same sector company over here will be SurveyMonkey. Right, so what this company aims to do is to help big conglomerates over here, and also mainly right now their biggest clientele is the healthcare sector. Right, run surveys, right, and try to get all these data, right, all these data over here for these conglomerates on the schemes that they're running. Yeah, okay, employee satisfactions over here with customers that they have like Walmart, and also with government agencies that they have, all right, like US Postal Services, Department of Agriculture, Department of Education, right, and even the Federal Reserves. Yeah, all right, they're all engaging this Medallia's platform for both customer and employee engagement, right? So this is a very big market for them, right? And they've seen very good growth in the last 1 year. Right, and of course, like I said, right, their biggest competitor, or we would say their closest competitor right now, is actually none other than SVMK. Right, and SVMK is actually the owner of the SurveyMonkey brand. Okay, but you realize right now, SurveyMonkey is very big with small scale retailers and online marketers like us. Yeah, all right, and what we do in a very small scale. All right, but Medallia is going after the conglomerates. Okay, so seeing this over here and a recent sell-off in Medallia stock price, okay, despite increasing sales year on year, their sales revenue has been increasing since 2019, and every quarter, all right, they've been increasing on their sales revenue, right? So this is a good sign over here in a growth company, all right? So I'm going after one of this right now, okay? And I'm actually going to be a little bit aggressive because the stock has sold off recently. It's hit a 52-week high, as you can see, of $48, all right, before falling to $30 right now. Okay, so I'm expecting that in the next 1 month over here, right, it will shoot back above $30, right? So I'm going in the money with this, slightly in the money with this strike over here, right? So I'm gunning after 260, all right? Let me try 265 first. Okay, so I'm gonna gun after 265 for this put option sell, all right? So Medallia MDLA. Okay, so it's gonna be the 21st May as well. All right, 30 strike put option. All right, 265. Let's see. I'm going in over here. They're not giving it to me. All right. So I've got 2 orders right now, and they're not giving me either of them. This shows you how difficult the market is right now. Yeah. I've just adjusted to 260, everyone, and it's still not giving it to me. All right, I'm not moving anymore. All right, I'm already taking a worse end deal, so I'm not moving it anymore. All right, so let's go through both our trades over here. I'm selling the Medallia 30 strike put option for 21st May. Okay, and my order price right now is 260. Okay, it's 260, and then I place an order for CAH. Right, so let's go back to CAH. Also for 21st May over here, we're selling the 57.50 strike put option. Okay, and I've amended my premiums to 145. Okay, I amended my premiums to 145. It seems like some of you have done it at 140. Yeah, right. If you're comfortable, please go ahead and make your own judgments. Right, but I'm going for 145 over here. Yeah. Right, so this is what I will do over here, and both my orders are still working. If they do get filled, I will be posting the trade updates in the Facebook Live comment segment. Yeah, all right, in the comment segment. So, yep. So for now, they are all working orders. All right. Now, so I'm going to jump into questions after this. I see a question from Nelson. All right. If any of you else have questions, you can start posting them right now, because we understand that there is a little bit of lag with the backend software over here. All right. So start posting your questions for me if you have them. Yeah. Now, so let's go ahead and calculate the trade returns on Medallia. All right. Now, so for Medallia over here, I'm placing my orders at what was it? 260. Yep. 260 for a strike that's $30. So that's about 8% ROI. All right. And this is, let's go ahead and see it again. Oops, this is not it. This is a 42 days option. All right. So it's 6 weeks to expiry. All right. And then divide by 6, remultiply by 52 weeks. All right, this is a 75% ROI trade. All right, if it works out for us. All right, so let's see if we get filled on either of this order. I will be updating it in the Facebook Live under the comment segment. All right, if I do get filled on these trades. As of now, they're not. All right, so we'll continue to monitor them. All right, so let's get to Nelson's question over here. So Nelson's question, you're prepared? Yes, Nelson. As I mentioned over here in our public segment, which is what you're attending right now and what you're seeing right now. For every put option that we're selling, all right, I am putting up the full cash as the deposit requirement. All right, so if I'm going to sell 3 contracts, as you see on most of my trades over here, if I'm going to sell 3 contracts of the CAH Cardinal Health 57.50 put option, I will need 5,750 times 3 over here. All right, so that's the requirements that I'm going to put up. So 5,750 times 300 shares, so that's $17,250, right? $17,250, all right, Nelson? All right, so this segment over here, it's all full, or what we call portfolio puts, all right, which means full cash deposits over here. Now, if you want to learn how to do the same option selling trades, but with much smaller margin requirements, which means some of our students are doing similar trades on Cardinal Health over here, And for 3 contract trade, they are spending anywhere from like $600 to $800 only on their margins, right? With no heightened risk, right? So if you are interested in, figuring out how you can do better as a official portfolio option seller, or an option seller over here, right? Do get in touch with my team over here, right? For some of the possible mentorship programs that you can get yourselves on. Yeah, I'll put it up again right at the end of the session. All right. I just want to answer some questions right now first. Wave Rider, no problem. All right, Wave Rider. Now, so the first up, I'm just going to type it over here. They're not filled yet. Okay, they're not filled yet, but I'm just going to type the trade details over here. All right. Okay, let me clear up the color codes over here. All right, so this is going to be trade 45 and 46 if they do get filled. All right, I placed 3 contract orders for each. The first stock was Cardinal Health. The second one was MDLA. Right, both of them are for 21st of May. Cardinal Health was at 57.50 strike, and Medallia was at 30 strike. And of course, we're doing this on 9th of April. Now, the premiums I'm asking for right now is 145, and for Medallia, I'm putting up the order at 260. Now, so if this gets filled, all right, I will be collecting $435 in cash flow on 3 options of Cardinal Health. And for Medallia, for 3 options, I'll be collecting $780. Okay. Now, so how much margins will I be putting up over here? Right, like I said, a full cash margin requirement. So that would set me back $17,250 for the CAH trade, and then $9,000, right, for 300 shares of Medallia at $30 a share. Yeah. All right, so that's what's going to happen over here. All right, now, so Wave Rider, you got the details, okay? But as of now, they're not filled yet, okay? All right, now, Isaac, hang on for your question. I just lead on with Andy's part over here. Now, what's going to happen? All right, now, so this is a portfolio put segment. As I said again and again, right? If any of these stocks get, if any of these put options get into trouble, I'm just going to take the stock. All right, that's how we're going to build this public portfolio over here, right? Just like what we did with Nokia. Right, Nokia over here, right, when the put options expired, right, I ended up having the shares and I'm still holding them right now. Yeah. Okay. Now, so if this happens to any of these put options, I'll just take delivery of the stocks. And that's why, right, that's why I'm allocating the capital required, right, from the very beginning. All right. So this is different from how we do it in our mentorships over here. Right. So, if you have questions on, how we execute our strategies, that we learn and teach in the mentorship programs, post it, right? Andy, you can post it in the mentorship groups, yeah? All right, if you want to ask further on these topics. Okay, but over here, all right, over here, we are only talking about portfolio puts, all right, Andy? So don't get yourself confused, all right? It's different strategies altogether. Okay, all right, now, so Isaac, let's get to your question. All right, Isaac, I just wanted to free up the margins, that's all. All right, I was tying up margins on Tupperware over here, and with 1 week to go and like 5 cents, all right, was it 5 cents or 10 cents? 10 cents, all right, with 10 cents, all right, I'm more than happy to just pay and get rid of it. If you're happy to keep it, you can, all right, because I'm just saying, like I expect market to collapse any day now, right? Any day can be a turnaround day, and we can see the market fall 100 points, right? So I don't want to, take any risk on these trades. They're worked out very well right now. Yeah, okay, so 10 cents isn't going to eat too much into $1.23 that I've collected for the trade. So it's just a trade management decision. Yeah, right, it's just a trade management decision, Isaac. No right or wrong over here, yeah? All right, now, so Wave Rider. So you're ready to buy Medallia over here at 30, all right, and not wait for a better price. All right, now, what's the FA of this company like? The FA is a growth company. All right, Wave Rider. So this deviates from some of our normal companies where we look for good dividend-paying companies, right? So Medallia is not. Medallia is a growth company, right? I'm banking on sales revenue growing, right? And if I'm wrong, I'm more than happy to hold on to this stock for a little while over here. Yeah, right. So that's the logic behind it. So Isaac, what's a good percentage to sell back the stocks if we are signed? Now, any portfolio puts that I'm selling over here, right? It's because I like the fundamentals of these companies, all right? So I'm more than happy to hang on to these trades and perhaps sell some call options here and there, right? Sell some call options here and there, right? And then, liquidate the stocks if I get called out on the call options over here, or if I have a profit on trade, I might do so as well. If you notice over here, this was something that we did on our ED trade over here, right? So our ED put options was assigned to us, right? We took delivery of the shares and then we sold the call options after that. Okay, and after that, right, the stock was closed off, right? So our call options over here, we closed it and we closed the stocks as well for an overall profit. Yeah, right. This trade was an overall profit over here. All right, we collected $255 from the put option that we sold. All right, we collected another $270 from the call options that we sold as well. Right, but we took a hit of $360 on the stock itself. Right, so this will still make the overall trade profitable. Yeah, okay, all right. So it just depends. Yeah, okay, because by freeing up these margins, I can always restart on a trade all over again. Yeah, okay. All right, now, so Andy, all right, once again, if it's one of those mentorship strategies that we're talking about, please post your questions in the mentorship groups, okay? All right, Andy? All right, now, so any others with questions that you have over here? Okay, great. Now, so if we do not have any further questions, I'm not going to hold any of you back. All right, Celine, last minute over here. You squeeze it in. All right, let's go. Celine, in the money will only be assigned on expiry. Will there be a chance that the stock gets assigned before expiry? Right now, I cannot say never, right? But Celine, you need to understand that the put option buyer usually has no benefit, right, to actually exercise those options early at all. Yeah, okay, so that's why the probability of such an occurrence is also very low to you as a seller. Right now, let me go deep a little bit over here and take this as the last question and also use it as an education component. Right now, so first, when we sell put options, we'll face two buyers, right? That means people who will buy put options from us. Number one, okay, they are people, right, who actually have the stocks, right? That means these people own the stocks and they're buying these put options as protection for the stocks. Yeah, okay, they're protecting their stocks. Now, so imagine this, right? When they buy these put options from us, right, it's already paid, right? That means the protection is paid for, right? So do you think, right, that they will want to give up their shares early, or they will continue to hold and fight all the way to the end? Right, Celine? All right, now, so you realize that they have no incentive, right, to actually want to give up their stock early, right? They already paid to protect the stock, right, up to a certain date. So most of these people will actually hang on all the way to the end so that their stocks that they own right now have that fighting chance. The reason why they buy protection is really because they don't want to let go of the stocks, right? So you see, the first group of people, our customers over here, have absolutely no incentive to exercise it early. Number two, right, the people who are buying put options, right, to trade it and to make profits from it. So these are outright put option buyers. Now, so if they paid $1 for their option, right, and then it became $3 after that, they don't want your stock, right? They'll rather just sell off the option for $3 and take their profits and roll to the next trade. So you realize both group of participants that we are targeting right now have absolutely no incentive of exercising their option early, right, ahead of expiry. Now, so you can see why the probability of this happening is really, really low. But of course, there are crazy people around, right? Crazy people who do things that do not make sense all the time, right? So if you happen to meet one of these people, then it's just unfortunate, right? But it doesn't matter to us, because if we do it in this manner, which is portfolio puts, right, we have the cash allocated, we have the cash ready to pick up all these stocks. Yeah, okay, so it doesn't detriment us at all. Yeah, all right. So first up, the correct answer will be, the chances of it happening is really low. Okay, Celine, I hope that helps you out with the question over here. Now, next up, Adelaine. All right, Adelaine, last question. All right, you're asking about the VIX. Like I mentioned at the start of the session, I'm not managing it right now. We have another 1.5 weeks to go. So I may talk about it next week. Yeah, right. I may talk about it next week in our session. Okay, now, so that's all for our session over here. My orders are still not filled, everyone. So I will leave a comment after the session. if, all right, if it actually gets filled, okay? Now, so do me a favor over here once again, everyone. If you do enjoy the section and the sharing over here and also the education components, and please help me with the Facebook algorithms by clicking a like button on the videos. And also, if you feel that more of your friends can benefit from the sharing that we're doing over here, right, just hit the share buttons and share it out to your friends out there. Yeah. Okay. I'm going to be running this segment every Friday, right, at 10:30 p.m. over here, barring US trading holiday. Yeah. All right. Because there's no markets open, so it's pointless even if I run the session. Yeah. Right. So as long as markets are open on Friday, I will do my very best, right, to keep running this segment and these sessions over here at 10:30 p.m. on Friday, Singapore time. Okay. Now, so help me hit the likes buttons before you leave and exit this session today. And of course, right, more importantly, sharing out this video. All right. Once again, over here, for those of you who are in our trading mentorship, I will see you on Monday nights, okay, for live trading with TT sessions. And for those of you who are under our fast track mentorships, I will be seeing you on Tuesday nights, our live trading webinars together. All right. Thank you very much. Thank you, Nelson. All right. And thank you all. And Andy, I didn't forget this. Please remember, post this question in your Facebook mentorship group. I will help answer you from there. Okay. If not, remind me. I'll cover it in our next week's live trading webinar together. Okay, Andy? All right. Now, thank you very much, everyone. Have a great, lovely weekend. All right. I'm going to take a rest over here because I just got myself vaccinated. All right. Okay. All right. I'm going to start feeling a little bit of those effects right now. Thank you very much and have a great, lovely night and weekend, everyone. Bye-bye. This is Terence Tan, the I Am Possible Investor, signing off for another week of portfolio building with Terence. All right. Thank you. All right. Thank you, Clement. All right. Great to see you here as well. Good night, everyone.